The Financial Planner, presented by BSC, Investors Protection Fund.
Hello and welcome. You're watching Financial Planner. And yes, it is Diwali and you're probably wondering whether you should go out there and buy some gold. We've got Hemant Rustagi, CEO of Wiseinvest Advisors, joining us to tell us whether or not gold continues to be a hot investment option. Thanks, Hemant, for joining in this evening. Hemant, it is Diwali around the corner, and of course, for cultural more than financial reasons, most Indians go out there and buy gold on Dhanteras. The last 2 decades, the performance of gold has been outstanding, to say the least. But of course, in the last 1 year, with gold prices going out of the roof, diamond or jewelry sales have actually halved, I believe. Do you think gold continues to remain a good investment option? And I'm not talking the cultural and emotional aspect, but financially as well. Would you advise people to go out there and buy gold right now?
Well, firstly, I totally agree with you. You know, the demand for gold usually peaks during the festive season, and I think this year is not going to be any different. But I think there are a couple of factors that are likely to test the demand for gold. One is obviously high price of gold, and second is obviously high inflation. These are two factors which are going to test the demand for gold. And also, I think what we've seen over a period of time is a marked change in the preference for those who buy gold. For example, those who like to buy physical gold are slowly and steadily moving towards gold coins and gold bars. And also, I think paper gold is slowly and steadily emerging as an investment venue for those who like to invest in gold over a period of time. Well, as far as the gold as an asset class is concerned, as you rightly mentioned, over the last 2 decades, gold has been doing very well. But in the last 6 months or so, if you really see, investors have been facing the dilemma whether they should be investing in the gold at the current prices or not. And I think the contrasting views that they are getting on the prospect of gold going forward is actually adding to their dilemma. On one hand, you have experts who are thinking that the gold will continue to shine, and on the other hand, you have experts who believe that I think it's time for gold to really correct. I personally believe that even though we're going to see maybe slightly more volatility in the gold price, but I expect gold to do well as an asset class over the medium term at least. So I think gold definitely can be a part of the portfolio. Of course, one has to make sure that one is not driven only by the past performance. And the reason for that is if you rely only on the past performance, you may either end up having overexposure, especially when an asset class is doing very well. The tendency is to ride on and join the bandwagon when the asset class is doing very well, or having underexposure if that particular asset class is not doing very well. I believe that's why investors should follow an asset allocation model, which means they need to decide how much money they should be investing in gold, which means...
how much should they ideally be investing as part of a portfolio?
Well, I think the thumb rule is around 10%, but I think a lot depends on your personal situation and the reason why you are investing in gold. Like I said, from asset allocation point of view, it's very, very important to have, my recommendation is to have definitely gold in the portfolio. And I think one of the reasons why gold also should be a part of the portfolio and why it works very well in the asset allocation process is because gold has a negative correlation with other asset classes. So I think this is the reason why gold should always be in the portfolio.
How important is the fact that gold has a negative correlation with other asset classes? Because currently, of course, the global economy is not looking very good. And of course, at a time like this, gold becomes a hedge or becomes a safe haven investment. How important is this correlation that gold has with other asset classes, which is of course negative?
Well, I think it's very, very important. Especially when you're following an asset allocation model. The reason why you do that is because it provides diversification in the portfolio. So when you invest in different asset classes, they behave differently over different time periods. And that is where you get diversification in the true sense. In case of gold, because it has a negative correlation, it really works very well for the asset allocation process. And I think the reason why there is a negative correlation of gold with other asset classes is because the fundamental factors that impact gold are very different for other asset classes. Second important thing is the demand for gold comes from diverse sources. Now, central bank across the world, financial institutions, jewelry sector, gold coin, bars, manufacturing sectors, gold ETF, e-gold. All these sources basically create the demand for gold, which means that there is almost no or very low liquidity risk, which is very, very important. Another factor which works well for gold is that the demand and supply factors do not impact gold as much as they impact other commodities. So the reason is because it has a hybrid nature. It's a commodity as well as a currency. Another advantage of investing in gold is that it does not have a credit risk. Of course, when you invest in gold, as we mentioned earlier, you are likely to face price fluctuation, but that can be tackled if you follow a disciplined approach of investing in gold. which could be, investing every month or investing every 6 months, investing every year. So I think there are more than one reason why gold should be in the portfolio. And like I said, the fact that it has a negative correlation with other asset classes, I think it works wonders for asset allocation process.
Even in the next couple of days, you'll have a lot of us flocking to jewelry stores to go out there and buy some gold, given that it's Dhanteras. What are the pros and cons of investing in physical gold? And I'm talking about jewelry as well, because that is, or that at least till now, has been a more popular option when you're buying physical gold.
Well, the physical gold is the most popular way in which Indians buy gold. And within that, again, I think jewelry is the most preferred option. And the reason for that is I think the level of acceptance is very, very high. And people find it very, very convenient to go and just buy jewelry. But I personally believe that one should buy jewelry only if it is required for consumption. Okay. It could be for your own use, or it could be that if you're willing to, going to gift it to someone in near future. Okay, then you can buy jewelry. Of course, there are certain drawbacks when you buy jewelry, and especially if it is meant for investment. So, my first recommendation is buy jewelry only if it is for consumption. If you are looking at buying jewelry because as an investment option, I don't think it's a great option, because there are quite a few drawbacks there. One is that there is an issue of storage.
Okay.
There is always an issue of purity. Right. Then there are high making charges. For example, you're buying jewelry now as an investment option, which you're not going to be actually using maybe. So you're paying making charges for that. It's not very tax efficient also to buy physical gold as compared to the paper gold, which is much more tax efficient.
So there's a wealth tax as well that you pay.
There's a wealth tax, and the long-term capital gain arises only after you hold it for 36 months.
Also, is there a wealth tax on gold bars and coins as well, or just on jewelry?
On the physical gold,
on
the physical gold. On the physical gold there is. But even when you want to buy jewelry, I think one important thing that everyone needs to remember is to insist on hallmark, because that ensures that there is purity and as well as there is fineness in the jewelry.
Hemant, in the last couple of years, I would say, or probably in the last 1 year, even more so, paper gold gets talked about a lot more. I don't know how many people would want to go out there and buy paper gold on Dussehra, but why is paper gold being promoted so much? Is it a better option when compared to physical gold? And if you can just take us through the various vehicles of investing in paper gold.
Well, it's certainly a better option if we were to really compare buying physical gold with the paper gold. And the reason, there are many. As we mentioned earlier, like there are certain drawbacks when you buy gold. I mean, we talked about jewelry, the issues that you have when you buy jewelry. The same thing happens when you buy gold coins and gold bars. There is a high premium that you pay every time you buy a gold coin or gold bars. And of course, there are other issues of, that we mentioned earlier, storage and purity. And so quite a few issues that you have. If the intent is to invest in gold for investment purpose, then I think paper gold is a much better option. Okay. And the reason for that is because it's very, very convenient. And as I mentioned earlier, it's more tax efficient to buy paper gold. Of course, Indians love touch and feel the gold. I think gradually it's changing. If you remember, what same thing happened in the stock market. Everyone said that when they started electronically transfers, everyone said the Indians are not going to accept it because they like to touch and feel their investments. But the fact is today everyone is so happy. The whole market has become so efficient today because of demat. I think the same thing is gradually going to happen here. Paper gold is definitely a much more efficient method of investing in gold. Okay. There are three methods through which one can actually buy paper gold. One is the gold exchange traded funds. As the name suggests, it's basically funds which are traded on the stock exchange. They are akin to stocks. So which means that anyone who wants to buy and sell gold exchange traded fund must have a demat account like it is required for buying and selling shares. One must be registered with the broker, because that is how he's going to facilitate buying. And of course, there is an option to buy online. So one is that you need a demat account to start. The second is that it's very, very convenient to buy. You just have to place an order and you can buy. And 1 unit in a gold ETF is equal to 1 gram of gold.
So that's the smallest unit that you can
No,
buy.
there are 1 or 2 funds which have half a gram gold equal to 1 unit. So which means that even if you have less than 2,000 rupees today, you can actually start buying gold ETF, which is generally not possible when you're trying to buy physical gold. So I think that is another advantage why one should be looking at that. So like I said, if your intent is to accumulate, start buying paper gold, as and when, if you want to convert it into jewelry also, you can sell gold ETF and buy jewelry.
And there's no wealth tax on gold.
There is no wealth tax, and in terms of tax, they're more efficient because if you sell gold ETF after a period of 12 months, it is treated as long-term capital gain, which is taxed at a concession rate of 10%. You can claim indexation in a high inflation index scenario, and then the post-tax return is going to be even more. The second option is gold saving fund. Now, as we discussed earlier, gold ETF can be bought if you have a demat account.
So they're traded on the stock exchange, like
absolutely. You buy them exactly the way you buy and sell shares. Now, not every investor is familiar in how to, trade on the stock exchange. They're not very familiar with stock markets. So there is another option for those people. This is gold saving fund. These are typically fund of fund. Now, what actually happens here is that any fund that has a gold ETF also has a gold saving fund. Because it's a fund of funds, so money that is collected in the gold saving fund is eventually invested in gold ETF. So you actually end up investing.
The transaction cost of this must be high.
Yeah, it is. It is. I'll come to that. Yeah. So you eventually end up investing in the gold ETF, but without going through the stock market. So which is what is very, very important. Yes, there is additional cost, of course, because you are investing in a fund of fund, but they have normally capped it to around 1.5%. That is including the cost of gold ETF. But also, if you look at the cost factor, suppose you were to open a demat account and you're not a regular stock market investor, so you are having a demat account only for the purpose of buying gold. Now what happens? There is a maintenance charge there.
Yeah.
There is a transaction charge there. You're also paying brokerages. So I don't think in terms of cost, it's a great disadvantage if you take the route of a gold saving fund to invest in gold. So I don't think cost is a major factor here. The second important thing is that when you invest through gold saving fund, you can actually enroll for an SIP. Which means that if you want to buy gold every month, like any other fund, like equity fund or a debt fund, even in the gold saving fund, you can enroll for a SIP. You can tell the fund that, okay, this is the money that I want to invest every month on this particular day. Through ECS, the money gets debited to your bank account, and the money is invested in that. So one, you can invest systematically. Two, it's much more efficient to invest through this, and you don't have to go through the stock market. The third option is e-gold. Now, this is where you can buy gold electronically through an exchange called National Spot Exchange. Now, this is very similar to the gold ETF, basically.
Yeah.
Here again, 1 unit is equal to 1 gram of gold. Okay, the only thing is that you need a separate demat account. The demat account that you use for buying on BSE or NSE cannot be used here. You need to have a separate demat account. The market participants are different here. Okay, and also in terms of taxation, especially for the long-term gold, it is on par with physical gold, which means you have to wait for 36 months to get physical gold. But one major difference between other two options and e-gold is that in e-gold, as an investor, you have an option to convert it into gold, which is not available in gold ETF and gold saving fund. So I think there are these three options available depending on the kind of investor you are. Like I said, if you're already a stock market investor, you can buy ETF. But if you want to buy systematically and don't want to go through stock market, gold saving fund is a better option. In fact, in addition to that, there are some multi-asset classes fund also. There are funds which invest in gold, equity, and debt. There are some funds which are investing in debt and gold. Those also can be a good option for investor, especially for those who cannot decide what kind of asset allocation they should have. We did discuss about asset allocation. So some investors find it difficult to decide how much money should go into gold. So there are some options where you can look at this multi-asset classes fund, and that can be also a nice way of investing in gold.
For someone who's looking at paper gold for the very first time, what would you advise them to do?
Well, like I said, if you're not familiar with the stock market, the best way is to go through a gold saving fund.
Also, which are the best gold funds gold ETF funds that you've come across recently? Anything that you can advise our viewers?
Well, the good thing about gold saving fund, gold ETF is, for example, gold ETF is a passively managed fund. What it does is tries to track the price of gold in the spot market.
Okay.
And the difference will be like expenses which are there. So I don't really see much of a difference in terms of performance.
It's only one asset
It all depends on if you're comfortable with a particular brand of mutual fund, maybe you can go with that.
Would you be buying gold this Diwali? And if yes, what is the kind of returns are you expecting on gold in the next 1 year, from this Diwali to next Diwali?
Well, like I said earlier, when I advise others to follow asset allocation, I do follow it for myself. So surely my investment in gold will continue. And as I mentioned earlier, even though I expect that there is going to be increased amount of volatility, I expect gold as an asset class to do well in the medium term.
So if it's 30,000 this Diwali, where do you see it next Diwali?
Well, difficult to predict, but I feel that
it should do
well.
returns.
Yeah.
Well, that is all about gold. If you're getting caught up in all that glitter, we've just got you some advice coming in from a financial expert who does say, yes, gold is still looking like a good buy. It might be volatile, but will do you good in the medium to long term. We'll take a break on that note. We'll come back and, of course, take up all your financial planning queries, so stay tuned.
The Financial Planner, presented by BSC Investors Financial Planner, presented by BSC Investors Protection Fund.
Welcome back. You're watching Financial Planner. Now we'll take up all your financial planning queries.
Investment Ladder, presented by BSC Investors Protection Fund.
Hemant, we've got a query from Chandrakant, and he says, please give your opinion on the Birla Sun Life Frontline Equity, Religare Contra, and Canara Robeco Equity Diversified. He also wants some information on HDFC Standard Life ULIPs. Is that a good investment vehicle? So if you just want to talk about ULIPs a little bit and tell us what you think about his options.
Yeah, let me begin with his investment in the mutual funds. I would recommend actually one change. Two funds, Birla Sun Life Frontline Equity, Canara Robeco Equity Fund can be retained. In place of Religare Contra, I would recommend a fund called Reliance Equity Opportunity Fund, which is an opportunity fund, comes in the mid-cap category, creates the right balance in this portfolio, and performance-wise, it's much better. I'm expecting this fund to do well over a period of time. So I think one change in as far as the mutual fund portfolio is concerned. On ULIP, as the name suggests, is basically a unit-linked insurance plan, which is a mix of insurance as well as investment. ULIP is essentially a long-term investment product basically. So unless and until I believe that you have a time horizon of 10 years, you should not be looking at ULIP. But considering the fact that you have already started the process of investing in equity fund through SIP, what you need to look at is basically ascertain the kind of risk cover that you need at this stage of your life, and go for a pure risk cover product like a term plan. And what it will do for you is, because term plan is much cheaper in terms of premium that you pay, it will ensure that you have adequate risk cover, and the investment that you are making in the mutual fund will ensure that you get good returns, provided you continue this process over a period of time. ULIP is going to do exactly a combination of two, but on the negative side there is that you may not get the kind of risk that you would like to get. For example, if you need a risk cover of 50 lakh, ULIP will not be able to give you that. So I think the key factor is, if at all you want to look at ULIP, look at least from 10-year horizon, but a better way is to keep your investment and insurance separate. Go for a term plan for pure risk and continue investing in the mutual fund for your investment portfolio.
Right, Hemant, we've got a query coming from Prasad Kala, and I think this is very similar in terms of what he's thinking. He says he's got a 27-year-old friend who's thinking of taking up the SPS Subnivesh for about 10 lakh rupees. He, though, feels that he should go in for an online term plan and start an SIP in a good mutual fund. Prasad wishes to explain this to his friend. Can you elaborate why you should not go with the SBI Subnivesh?
Well, Prasad, I would say you're absolutely right. As we discussed earlier, I think this SBI Subnivesh is basically an endowment plan with the option of whole life coverage. But the problem with endowment plan typically is that they generally give you return in the range of 6 to 8%. Considering that if your friend wants to invest for the longer term, he's going to struggle to beat inflation with this kind of return. So you're absolutely right when you say that the right way is to go for an online term plan, because that is how you're going to ensure that your friend has adequate risk cover. And because if the time horizon is longer, 10 year or 15 year or thereabout, equity as an asset class can do wonders, and then the best way for a small investor to invest in equity is through SIP and equity funds. So I feel that your friend will do the right thing if he goes by your advice, and he should then go for a term plan as well as SIP and equity funds.
Any good mutual funds you recommend, very quickly, if you can give us your 3 top picks?
Yeah, I would say in the large cap category, I would say ICICI Focus, Blue Chip. In the mid cap category, you can either look at IDFC Premier Equity, or we talked about Reliance Equity Opportunity, and in the multi cap, you can look at HDFC Equity Fund.
Well, Prasad, there you go. You're on the right track, and we've also given you enough reason to convince your friend as well. Of course, you can go tell him whatever Hemant has told you, that why Subnivesh, this SPS Subnivesh does not look like a great opportunity right now if you're investing for the long term. We'll take a break on that note. We'll come back and take some more of your queries, so stay tuned.
The Financial Planner, presented by BSC Investors Protection Fund.
Welcome back. You're watching Financial Planner. Hemant, we've got a query coming from Anil Kapoor, and he says, when there are thousands of funds, how can an investor track the change in exit load in the scheme in which he has invested? Is it not for AMCs to inform investors on changes related to these exit loads? What do you have to say to them?
Well, I would say, Anil, you're absolutely right. There are thousands of schemes and they're across different asset classes and different kind of funds. But I think as an investor, the good thing for you to know is that when you invest in certain funds, you have to worry about the exit load, which are concerning those funds. You don't have to necessarily track exit load for all the thousands funds that you have. If as an investor, if there is a change in the exit load, it's very important for you to know that it will not impact your existing investment. First thing is that if you invested, the exit load which are applicable to you are the ones which are applicable at the time when you invested. So therefore, you don't have to really track exit load. Even if there is a change in the exit load, what usually funds do is that they release a public notice in one national newspaper and also in one local newspaper. Also, the changes are circulated along with average offer document, come application form as an addendum, and it's widely circulated. So there is definitely an attempt from the asset management company to make people aware of the changes. But like I said, as an investor, it will not impact you. It will only impact those who invest in the fund from that date. If you want to know what are the exit load which are applicable to you, you can look at an application for your account statement. The account statement will contain the details on what are the loads which are applicable to.
So that the changes have been made, they would not be impacted if you're not a new investor?
No. For example, if I've invested 6 months ago,
right,
and today if the asset management company decides to change the exit load, it's only for the investment which are going to be made from now on. So my earlier investment which are already there do not get impacted by that at all. Of course, if I make any investment from now on.
Even if it's an SIP that goes in additionally?
Yeah. No, maybe not necessarily.
So whatever you've signed up
for the fresh investment, yeah.
Investment Ladder, presented by BSE, Investors Protection Fund.
Well, Anil, that's the advice coming in for you, and that's how you should be finding out about your exit load. But like Hemant said, it only impacts you if you're a new investor. And if you want to find out what your exit load is, you need to go back to the documentation that you signed up with the mutual fund. With that, it's a wrap on this edition of Financial Planner. Thanks for watching.
The Financial Planner, presented by BSE, Investors Protection Fund.